oil majors have, you're talking about the balance sheet of Exxon is like the least cash, but they have $40 billion or something.
Well, that and then all the stock that they have.
Yeah, the treasury stock.
Yeah, the
right.
treasury stock, yeah.
So oil majors have cash to spend, but they haven't been making a ton of acquisitions. And then, the devastation in the oil industry has been going on for over a year now. Do you guys think they'll actually start shopping at some point?
Well, I think we talked about it a little while ago as well when we were talking about Exxon's cash balance, that they kind of need that cash in order to sustain dividends, in order to – because if not, cash from operations isn't going to sustain that if oil is in the $40 range. And Exxon is addicted to the share buyback, so they'll have to cut that even more if so. So the cash has kind of been held as a necessity. Obviously, if these companies start going bankrupt like we've talked about in the previous segment, there's going to be some opportunities. And these companies that are failing aren't necessarily failing because they have terrible assets. They're failing because they were run terribly. So they're going to be out there for the cheap. And yeah, there will come a point where Exxon and the like decide, I think we have enough to sustain our dividend for the next year or so. Let's go ahead and spend not like 10 to 20 billion, but let's go out and spend
3 or 4 or something.
500 million, $1 billion here and there to go ahead and pick up some lucrative assets in Texas or the Utica Basin or something along those lines. They're not going to reach with this cash. They're going to be safer bets that are very cheaply valued. Because in my mind,
and I mean, I think this is on everybody's minds again now because we just heard the recent talks of. There was a story came out on Bloomberg that Apache had been courted by somebody.
No small company, mind you.
Right. No small. Yeah, they're a pretty formidable size company. Yeah. So when you hear somebody of the size of Apache getting acquired, everybody's fingers immediately pointing, oh, it's going to be Chevron. Oh, it's going to be Exxon. It has to be one of these guys because they're the ones that have capital. Surprisingly, it came out that it was actually Anadarko Petroleum that did it. So now that has happened, it just goes back to everyone talking about big oil. Oh, well, they've got the cash. They've got the treasury stock. It must be those guys. When are they going to make their move? And we've been wondering that for a long time. We looked at it and said, oh, these companies are so cheap, and some of them are really looking distressed. They could get them on the cheap. But at the same time, the situation hasn't exactly improved from back in February, March to today. And a lot of, if you listen to the conference calls of the companies that we're talking about here, ExxonMobil, BP, all of them are still kind of preaching that idea that, hey guys, we could be in this for a lot longer than some of these wildcatters being like, oh, we'll be back in 6 to 12 months. Big oil's like, hey guys, this could, 2016, 2017 might be maybe when we start to see recovery, but it could take that long. And so if you're one of the buyers or potential merger people in these companies, why bother? Why bother with making
you could buy something in bankruptcy court.
Yeah, you can buy something later when it's even cheaper or when it's even more distressed, or maybe wait a little bit longer because you have some efficiency programs you want to get through and you're now all of a sudden starting to generate some cash from these low oil prices, which we are starting to see from some players, surprisingly. And once that comes around, that could be certainly a more attractive opportunity. I mean, when the name Apache came out, what made that so attractive to a lot of people, if you look at Apache's assets, is they have a very strong presence in the Permian Basin. And the Permian has historically been a huge oil and gas producer for us in the United States. And with shale starting to take hold, everyone started to say, whoa, with all of that acreage there, somebody that has a decent position in the Permian like, Chevron, that could really compound that and become one of the key drivers for them in their next wave of development. 2017, a lot of the things that they've been working on are starting to wrap up, and everyone's starting to wonder, what are they going to do next? And somebody like Apache could be a big lever for them to pull later on.
Now, you guys may or may not be able to answer this, so it's totally fine, but maybe you just take a stab. At what point, and to Taylor's point, he's talking about, Exxon's committed to the dividend, they just want to hold on to this, that, and the other thing. They also need to balance that, I assume, with just reserve declines. At what point do they need to be like, we should probably buy one of the smaller guys just to, up our reserves or something?
Most of these guys are generally like breaking even or just barely growing reserves year over year. The recapitalization is that the replacement ratio. They generally want to keep that at like 100 so that they're right there.
Right.
You see it fluctuate between like 95 to 105. So some years they'll be a little less, some years they'll be a little more. But generally, these companies are big enough to where they're just trying to stay steady, right? And if the price of oil, which is what they kind of base their reserves on their balance sheets, does stay this low, then it's going to continue to decline. And yeah, the only way to really boost that is through acquisitions, because they would have to drill a heck of a lot to move the needle in terms of how much they're producing and selling.
And at least in terms of, again, big oil, they're not in a huge rush. I mean, somebody could say there's a panic because ExxonMobil doesn't completely, replace its reserves in a single year. They have, if not just proved, but if you look at their kind of pipeline that they talk about of potential reserve, they have 90 billion barrels of potential reserve. Just they're working through that. They haven't, it's like it's not in our proved reserves because we haven't like dropped them into our balance sheet, but it's like we're working on 90 billion barrels of potential oil. So they're not in a huge rush in any way to go do this. And I think one of the important things that they're going to look for is not just cheap, not just, grow reserves, but fit. What is going to be a company when they bring them on that is going to be a good strategic fit? Royal Dutch Shell has been looking to make their purchase of BG Group because they're like, we're going to make a big splash into LNG. And so with the BG Group, that they're kind of pushing more towards LNG. So if you have somebody like ExxonMobil or Chevron who may be making some big move in the future, they're going to want to find something that really fits within their development portfolio, that they can not only develop but kind of combine with what they have and get a lot of cost savings and things like that. Certainly after ExxonMobil made that XTO purchase in 2011, it took them a few years to figure it out. And I think they learned a lesson from that.